The high tide of prosperity will continue. Andrew Mellon, September 1929. What's up, everybody? Welcome aboard. It is Bubba's Bottom Line, and always great to be here with you on our last show of 2018 as we start to get ready to bring in the new year. And of course, a lot of things have been said, and of course we go back to many of the famous quotes back in history about the high tide of prosperity, about no need to worry, everything is fine. And we'll talk about more of that in our commentary. But here we are, and boy, what a wild week for the markets last week. Some things that I didn't think I'd ever see again. But we have the big question, and the big story is, you know, are the markets too volatile? And I have to remind everybody that volatility itself, okay, this is not that high, okay? It may be high because of all the manipulation from the Federal Reserve and from everybody trying to manipulate markets, but the 20-year moving average of volatility is about 25%. And again, that's taking into consideration the extremely low volatility we've had for the last 10 years. So my point is very simple, that this is normal trade in markets. And you know, we listen for where the outrage is about the high frequency trading. You know, I heard a lot of outrage on Monday about high HFT trading, but magically on a record up day on Thursday, on Wednesday, we heard none of that. Now, why is that? I always wonder why we have to continue to listen to crap from people. Of course, I guess I have to understand it because I listen to it all the time from the trolls out there. But why is it that when the markets go down, it's high frequency trading and algorithms, and the markets go up, oh, it's just buyers coming to the market? Always something that made me wonder. But again, we are in for a volatile time. I mean, I think you have to look at, are we going into recession or depression? Is there something more underlying the markets here? And, you know, again, we can look at a lot of things and a lot of reasons that markets can go higher. Again, I'm not saying they can't go higher. I don't think they're going higher. But again, either way, are we starting to run into some economic trouble? And I think one of the things you have to look at first is, again, we've talked about this, I think, for years, but the massive amounts of debt, okay? The debt cycle, it continues to mount. And of course, what's going to happen now that Christmas is over, now that we're going into a new year, now that all those credit card bills are going to come due from all the consumer confidence from going into Christmas season, where everybody wanted to make sure they had a good Christmas, now that the bills are going to come due, where's the money going to come from? Okay, now that we're back to overspending, you know, they love, the media, the pundits love to talk about this consumer confidence, and it's never been so high since, and again, we go back to the last time it was this high, 2001. What happened in 2001? The markets collapsed. Now, I want to remind you that if you're a long-term investor, that you should not look at the market on a day-to-day basis. Okay, if you're a long-term investor, forget about it. Okay, as long as your companies that you are investing in are solid companies, like GE. Like GE would have been one that you should have recognized, you know, at the time. Now, again, you can never get out the top, but when you started to see the change in not the stock, but in the company direction, that might have been an indication that it's time to get out of that stock. But just to get out of a stock, to rotate from one to another, is a fool's game. Okay. Now, of course, the advisors and the brokers love when you do that because they make their commission. They make their money when you are in the market, not when you are out of the market. And I would never recommend anybody get out. I think that the stock market is the greatest wealth building machine in the world. Of course, as you know, we've talked about this before. We hedge our portfolios, and we have 2 new classes starting in January. But even if you don't hedge, okay, the market goes up on average 8% year over year, not every year. So it's easier to stay in the market because it's not timing the market, it's time in the market. And again, I have no benefit whether you do or you don't. I'm telling you that from a straight mathematical standpoint, it's better to stay in than try to figure out where the tops and bottoms are going to come on. We'll give you trading levels always. That's what we do. But from an overall, if you're just a straight investor, then you should really just quit looking at your 401k every day and quit looking at all the factors and not get so concerned by the gyrations of the market, because the markets are going to have a lot of gyrations. So as we look into, are we going into a recession? Every expert says, no, there is no recession. Well, again, these are the same experts that told you to buy in 2008, 2008, early 8, and they kept telling you to buy. These are the same experts that kept telling you to buy now. Now, again, I'm not saying the market can't go up. I'm saying that I believe that there's a lot more trouble coming out here, and there's a lot of issues, okay? And I think that we've clearly laid out our picture, and we've certainly seen the start of a correction or a bear market, and I think the bear market's going to get much more severe. Recession, depression, I can't make that call. I don't know. I would certainly think there'd be a recession. Again, I don't like to make calls that are too far out, but I would say that from my picture and my point of view, the economy is in good shape, but it's not as good as we think it is, and I think we're getting ready to make a little bit of a downturn. Again, for all the reasons we talk about all the time, debt being the main one, because again, I'd love to see the faces on everybody who spent so much for Christmas, how they're going to pay back all those bills. But again, you have to remember, one of the most important things is your mind, okay? It's the psychology of being involved in the market, whether you're being an active trader, whether you're just a straight investor, whether you're doing a little bit of both, whether you're trying to day trade. It always comes back down to what's between your ears, okay? Because that's where most of the mistakes and most of the things happen that force us to make a bad decision. And that is always something that I warn about, because we all suffer as human beings. We all suffer from the same types of things when it comes to money, emotions, and they a lot of times overrule us, which is why I always say, if the markets are making a big move that is making you afraid, before you do anything, take a deep breath, relax, and then evaluate your position. But the simple point is that we have to worry about our mind, which is why you should have a trading plan. And just a side note, I did a webinar on trading plans on Wednesday, that if you would like a copy of it, just email me at bubba@bubbatrading.com. I'll be happy to send it to you free. There's no charge. I want people to understand the certain things about markets that happen all the time, that you can avoid some simple pitfalls that will cost you some dough, okay? But, when is this selling going to end, okay? And I will tell you that from my perspective, it's got a lot more room to go, okay? Now, again, I don't like to make big, huge predictions to the downside or upside, but I will say this to you, that I think that we're going to see in the next year a 15 to 20% haircut more to this market from where we are now. But that does not mean there will not be more vicious rallies like you saw on Wednesday, and even the recovery on Thursday. I think those are things that you have to look at and understand. Remember that bear market rallies, okay, bear market rallies are the most vicious rallies that look so unbelievably good, you can't wait to get into them, okay? But those are really the rallies you're supposed to be selling. If you just take the simple approach and remember this, okay? When the market is grinding higher and it's like, it just keeps eking out gains daily, that is a true action of a bull market. When you get these wild ups and downs, that is a sign of a bear market. So in those signs, you want to sell into those big rallies. But I do think we have a lot of room to go on the downside. I don't think that things have changed. I think we've seen reasons to believe that there's a lot of things going on here now. Of course, over the weekend, China and the U.S. supposedly, now again, we never get the actual facts, especially dealing with China. And of course, President Trump is very optimistic. So again, we don't know, but does a China deal would that signal the end of the bear market? Would that signal a rally? And my answer to you is probably not. Again, I think that China, everything has been priced in favorably for China, but there is some reports over the weekend that the talks are going well. And I would not be surprised, okay, to see the markets react positively, potentially tonight, tomorrow. But again, I'm not predicting, I don't know. But if the reports are true, then I would expect to see some positive reaction, possibly in grains and things like that. But the grains may have already played out some of that with their nice rally on Friday. So again, we have to take everything with a little bit of a grain of salt and understand that most things are priced into the market long before we ever hear the news. You know, was the phone call that supposedly went very well, did that happen on Friday? And somebody got wind of it in the markets? So that's something that we can't really take anything away from it. But I think one of the things you have to think about, and one of the things you have to look at is simply that the markets will always figure out a way to price themselves, and the markets are never wrong. The markets are always the absolute. So if you think that you're smarter than the market, you're not. Okay, you can follow the best idea is to follow the market footprint that will help you going forward, that will give you the highest probability of what will happen next. But of course, no guarantee, which is why you always has to have a defensive method to get out, which is why you should have a trading plan. Okay, and again, I will offer that to you. All you have to do is email me at bubba@bubbatrading.com, and I will send you a copy of that webinar we did, which was how to build a complete trading plan. In the meantime, we're going to step out here for a break. This is Bubba's Bottom Line. I am Todd Bubba Horwitz. Great to be with you, and we'll be back with more after the break. Hey everyone, don't forget, if you'd like to get your free copy of Gold is a Better Way from my friend Adam Barata of Advantage Gold, all you have to do is go to bubbatrading.com/gold. It's a free book, hardcover. Gold is a Better Way. Check it out, my buddy Adam Barata. And also, if you'd like to help us with our high school program, highschoolinvesting.com. All you have to do is go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, as we started to talk a little bit about last week's market action, and wow, Monday was the destruction. Okay, looked like they were going to zero. Interesting enough, now again, we had called for a rip your face off rally. And of course, we got a little bit of a rally in the morning on Wednesday. Market sold off a little bit, and then bang, the biggest single point day in history higher. Really interesting. And again, it was fast, it was furious, and it was straight up, it was parabolic. And simply, again, we talked about this earlier today, that vicious move should be sold. And of course, on Thursday, the market had given back about 60% of the rally, and I had come out and done my daily update midday when the market was down about 400, talked about that, and said I wouldn't be surprised if it went lower. And of course, the markets then went down to down 600, turned around and closed up on a day. Incredible rally on thin volume. But of course, nobody left that alone. They wanted to abuse me for my bad prediction. I go, hey, that happens. That's life. That's what makes a market. Okay. But I think overall my read on the markets is pretty good. But in the meantime, Friday was the strangest day that I think I've seen. It may be in my 39 years the strangest I've seen. It wasn't that the point movement was so big. It was how fast they were moving on the day. Now, again, one of the things you got to remember is it was slow, light volume, obviously coming into another holiday weekend. So that was one thing that can excuse that. But it was gapping up and down, okay, very quickly. It was up 100, down 100, up 100, down 100. And the bid offers were wide. It was very, very interesting on how it changed. And it's funny how it peaked at about 315 and collapsed. So it made a new high at 315 and made a new low at the close. So pretty bearish action. But again, we'll see what news will drive this tomorrow? It's going to, tomorrow's New Year's Eve. It's going to be quiet. It should be fairly slow, but it is a full day of trading. So we'll see how it plays out. We could be up big or down big. We could go either way. I would think that there may be a greater chance after last week's action that we go lower, but we'll see how it plays from there. But in the meantime, you can see there's a lot of fear in the market because what indicates fear? Well, we talk about the volatility index, which indicates fear. The bond market, okay, they're continuing to bid up the long bond, okay, which is unusual in a market that has been rallying a little bit. And how strong the 30-year bonds are getting to levels that haven't seen for a long time. And of course, the 10-year is now back under 2.8. So after being at 3.3 not that long ago, so you're seeing some fear. So the markets are fearful of something. The dollar has been able to maintain its strength, although lower and at the bottom end of support, it has been able to maintain strength, which is another item that should be reflecting of some fear. So I think there's some underlying fear in the market, and I think that you will see. And then if you take a look at gold, okay, gold is breaking out. Okay, so we were buyers of gold starting at 1180, watched all the way levels. We now broke out of our 1275. So it looks like we're headed to 1300 and then possibly higher than that. But again, I don't believe in gold as a fear asset, but the general public, the general street does believe in it as a fear asset. So gold is rallying. So you have a lot of things rallying that probably shouldn't be rallying. Okay, we saw a continuation in the grains to be pretty much lethargic. They had a nice little pop on Friday, but with the very, very light volumes, you cannot put a lot of credence into what's going on when we have these kind of volumes in the grains. I'm still a buyer. Nothing has violated my levels to the downside. I think they still go higher. I think that it's going to be a very good year, 2019, and I think for a lot of reasons. And again, I think I'm really tired and sick of hearing, well, the grain prices are lower because of the China trade wars. Nobody says that the grain prices are lower because of record crops that we produced the last 2 years. Okay, that could possibly have nothing to do with it, that there's an oversupply. Okay, but in the meantime, the lobbyists and the politicians will continue with their BS because basically that is what it is. Okay, the BS of the politicians and the lobbyists that are worried about themselves. They're not worried about us. They're worried about where their money's going to come from and all these shady backroom deals that they have, which is why, of course, the government is still shut down. Because again, I think one thing whether you like the president or not, okay, I happen to like him. I happen to predict that he would win. But whether you like him or not, you have to understand one thing. He is the only one, in my opinion, that we can see straight up that genuinely has the best interest of the United States of America. Okay. That is, again, my opinion. You can dispute it if you want, but that's my opinion. In the meantime, the meats look pretty solid. Cattle and feeders. The fat cattle, live cattle, is broken out to highs. Okay. Feeders are trying to break out, and if they get through 150, they could really go. And again, I wouldn't be surprised if they pull back a little bit here. Hogs struggling a little bit, but again, just coming back down to our bottom end of support. So I think we see a turnaround here, and so they look good. And of course, oil, again, oil got clobbered last Monday, had a little bit of a rally, but oil is going into the high 30s. When we got puked out the first time, we got back in the 70s. Okay. And of course, we looked for that. We called for the high 40s. I'm now calling for the high 30s. Now again, we'll see what happens there. But if you listen to the geniuses, well, we can't have oil cheaper than this. Okay, well, yes, you can. Look, as long as the frackers and the producers are willing to put out more rigs and pump more oil, what does that tell you? It tells you straight up, okay, that they're making money. They wouldn't be drilling if they're not making money. So they're continuing to make money, and you're not going to see much more of that. So we look for that to continue, and we look for oil to continue to fall. At some point, they'll find a bottom. Where it is, who knows? Okay, but right now we're targeting the high 30s. And of course, the cryptos have been struggling, but they've been holding up okay. Okay, you got to remember, okay, with the cryptos, and again, I'm not telling anybody to take a lot of money and put them in here, but I think you have to think of one thing, and you have to remember one thing about the cryptos. Okay, they're new technology. Okay, nobody wants them out there that supports the Federal Reserve, because of course this replaces the Federal Reserve, because then there's nobody who's controlling who can print money. Okay, so I believe that they are going to be real. I don't know which one, which is one of the problems, but I do believe that you're seeing something happen here in front of our very eyes, which is we in general, the United States of America and countries around the world, are becoming cashless. You know, there are many places today that won't even take cash as payment. Okay, so what does that tell you? We are becoming a digital society. Okay, now one of the reasons, in my opinion, that is happening is because they're trying to cover up, okay, some of the flaws and fallacies of the destruction that they've done to the dollar. But in the meantime, when you can't pay cash for something, and a lot of people have hoarded cash, okay, all of a sudden this becomes an issue. But this also shows you that there's some more underlying problems when you know, in the old days, shopkeepers couldn't wait to accept cash. Now, some of them don't want to accept it anymore. I think paper money is on its way out. I think that is one of the ways that you'll see that they'll be able to continue to scan the system, because everything will be plastic and just churning back and forth. So again, we'll see. I don't have the answer to that, but I do know that there are a lot of places that will no longer take cash. And I think that is something that is extremely interesting. And I think what you're seeing here this week, again, I think when you look forward to this week in the markets, I don't think you should, you could be a big move, but I wouldn't expect a lot. You know, this is from people who have the school age kids, this is the second week of the vacation. So we'll see, you know, again, it should be, the trading should be light. There can be some very big moves. I don't really have, you know, much to be involved with. I think that we continue to watch volatility. You continue to watch the general market. And again, I think that you enter something, if you find a stock that, or something that you find that a lot you want to buy, I think you buy it. I don't think you worry about what the holiday is, but I think from a straight business standpoint, it should probably be quiet for another week. I don't see a lot of action here. But of course, again, anything can change. You know, if China signs a deal, you'll probably see a spike. If there's any bad news, you could see some big movement. But again, from a pure standpoint, I think investors should just, again, continue not to look at their IRA, because it doesn't help you unless you're hedging it and trying to roll. I think you look at that. But I think that, you know, you've got a lot of things that happened that have popped up the market, propped up the economy, and I go back to the overwhelming consumer confidence. I go back to the pundits that continue to tell you to buy. I go back to all the debt that this created. So when all of these bills come due, well, who's going to pay them? And I think that these are things, you know, we're seeing slowing in manufacturing, we're seeing slowing in retails now, and you've already started to see some major discounting. So that never bodes well when you all of a sudden now, because you didn't sell enough, you know, retailers don't want to discount so deeply, and when you start to see that, that brings in a bigger problem. In the meantime, we're going to step out here for our final break and come back with my commentary on Bubba's Bottom Line. Todd Bubba Horwitz, Bubba's Bottom Line. We'll be right back. Hey, everybody. Listen, remember, help out our high school program. Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. And also, if you want to get that book from my friend Adam Barata, Gold is a Better Way, just go to BubbaTrading.com/gold. And in the meantime, if you want to get a copy of I can't remember what I was going to say. If you want to get a copy of the Building a Trading Plan webinar, just email me at bubba@bubbatrading.com. I'll email it back the recording, no cost, free to you. In the meantime, let's get back to Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz, and of course, what would a week be without my commentary? I could talk about the bowl season and what an embarrassment Notre Dame was, again, in the big championship, or how lousy the games were. Or I could talk about the championship game, but let's talk about something that I think is a little bit more important right now. And I think that really comes down to last Sunday, Steve Mnuchin, Treasury Steve Mnuchin, reassured us that the banks are on solid footing, called all the banks. Deutsche Bank during the week says that they're in good shape, ready for the next crash, next crisis. Now, what does that tell us? What is the message that is sending us? Why does the Secretary feel the need that we need to be reassured? This is one of the problems that I always say, and what I see and what I look for, and I find these very disturbing. This goes back to the quote. If you remember, I opened up the show with the high tide of prosperity will continue. These when big time officials feel the need that they have to assure the public, there's usually a reason that they have to assure, because they see much bigger problems. If you look at the bond market right now, the bond market suggesting much bigger problems. You've got statements coming out from Deutsche Bank that they're prepared. Okay, I think that you have to take this all with a grain of salt. This is the same thing in 2008. Paulson was on Face the Nation and said that our banking system was fine. It wasn't fine. I personally, again, this is my opinion, this is my commentary, I don't think the banks are fine at all. I think the banks are in big trouble once again. I think they're extremely over leveraged. I think this is something that that they're trying to get through, which I don't think they can, which is, again, goes back to this whole bickering with the Federal Reserve and what they're doing. And I think this is a problem. When everybody feels compelled to have to reassure us that everything is okay, it's usually not. Again, it goes back to the example I've used many times. When a coach gets a vote of confidence, it's usually a day or two until he gets fired. Well, I would say that you're going to start to see some more issues in our economy, because as we start to listen to these banks, first it's the Treasury Secretary, Stephen Mnuchin, says, banks are fine. Everything's in good shape. I don't believe in their stress tests. I think their stress tests are a crock. Okay, I don't think it takes into any consideration what's going on across the country, across the globe. Okay, Deutsche Bank says they're positioned well for a crisis, and there's others. So my personal views are, when somebody has to tell me that everything's okay, to me that usually means there's a much bigger problem, and I do see a much bigger problem in these markets and in the economy, and I think that 2019 is going to be a very rocky year. But that is really what I see, and I hate to see those things, but that's how I see it. I want to take the time to wish everybody a very happy, healthy, prosperous New Year. It's been great to be with you for the past year, and of course we look forward to being with you in the new year. So a happy, healthy, very prosperous New Year's to everybody. Of course, we do have Sunday night football tonight, and we like the Indianapolis Colts to trounce the Tennessee Titans. Have a great day, everybody. Thank you so much for being here. Happy, healthy, prosperous New Year. We'll see you back here tomorrow on Bubba's Daily Update and on Bubba's Bottom Line in the new year of 2019. Have a happy New Year, everybody. Thanks. We'll see you later.